I thought Wednesday was a really interesting day, and I'm excited to go over it. So, the first thing, when market opened up here at 9:30, look at this. The market opened exactly at the price from the close on Tuesday. It opened up at the exact same price. Now that's very rare. I looked back on the chart and I couldn't find another day where that happened, where it opened up at the exact same tick. Now, when the S&P was maybe around 1,000 and the movements were smaller, they probably happen more often. But with it being 6,000, the odds of it opening at the same tick as the close, that's very low. So I was kind of shocked to see that there. It was kind of funny. I'm working on the course that I still expect to come out March or possibly early April, and I have a slide in there where I was talking about how it's very rare that the next day opens the same price as the close, and of course, right as I'm doing that slide, this market opens up at the close. So it was kind of funny that this very rare event happened today when I was making that slide. So to make it easier for you guys to see, because I'm going to be talking about a couple different days here, I'm going to put the vertical line here, and that just shows you that this is today and this is yesterday, since there's no gap here. So market opened up at the same price as yesterday, and I'm going to mark one more trade here that I haven't marked yet. I'm going to mark this one. So first bar went down, tried to go a little bit below this low, and then failed and reversed up. Now, when the market opens near the close of the prior day, like it did today, that increases the chance of a trading range day. It increases the chance of reversals and two-sided trading. Now, we ended up breaking out and having a decent move up. But for basically the first half of the day, we were in, basically until the lunch period, we were in this opening trading range. Anytime on the open, when you have a possible reversal bar that's closing below its midpoint, like this bar, for example, so this is the fourth bar, then it's reasonable to try to go for a scalp with a stop order on that. So look, and this is the fourth bar that I have marked here. It is a double top with this level from the previous day. Right, so on the previous day, the market had moved up here, and then we went down, then tried to go up again and failed. Now we're starting to head lower. And we're also failing at the 200 and the 20 moving averages. So we have a double top. We have a bear bar closing below its midpoint on the open where we are expecting reversals to happen. So I thought it was reasonable to try to go for a scalp by selling below that bar. And you can see you could have gotten a lot more than a scalp. And so I think in this context, it's okay to either swing or just go for a scalp. So, go for 5 points and try to get out around the low, or go for much more, like 2 or 3 or 4 times your risk. Now that being said, since we are expecting reversals on the open, I would be more hesitant to take a big swing trade, because once you get a move down like this, there's a good chance it is going to reverse because we are expecting a trading range. And on the open, it doesn't matter how strong the move is. Half of those strong moves reverse. So you have to be, quick on your toes on the open. This big bar, this is the 10 o'clock news. So we had a news event at 10 o'clock. The selling here pretty quickly dried up, and we ended up with a bull bar here. So we can see we have a wedge, this push here, and then a second push, and then a third push. You could argue that you could buy above this and either ride it back to the moving average or bet that this is the low of the day and try to go for a much larger swing trade. And you would see that would have worked. That would have been fine to do. I think I would be more hesitant to do that just with this following this news at 10 o'clock. Then by the time this bar closes, it's 10:10, and we're still kind of being impacted by that news. So higher volatility, larger bars, a little bit of uncertainty because it's a news event. So I would be hesitant to buy above that for those reasons. But I think the price action would look good for buying that, for trying to bet on a swing trade up. Another reason that buying above here, or maybe above one of these bars, I'll talk about these, reason that buying would be maybe a good idea, because this could end up as a bear trap. So big bear bar, then a bull bar, which is bad follow through for the bears. When the bears see this, they're selling, hoping that the market just goes immediately down. And they just want it to go straight down, another big bar, and a third big bear bar. But instead, they get worst case scenario, bull bar closing on its high. So some bears are going to feel trapped. And so that's one reason why that is a pro for buying above this bar for a swing trade up. And looking at these bars over here, I am looking at these bars with this bear trap in mind. Big bear bar. Some of these bears that sold down here, they're going to be holding on all the way up through this. But at some point, they're going to start giving up and exiting their shorts, and that's what's happening right here. So as we're watching that, and I'm going to talk about this area some, and I that's what I keep in the back of my mind. We have this bear close down here. Market's moving up. We have a clear double bottom here, and we have a larger double bottom here. So market's pushing above the moving average. It's holding above the moving average. It's getting double bottoms. And now at this point, we're getting a fairly large bull bar, right? It's the biggest bull bar of the day, closing on its high after the bears have failed to go lower. So this was kind of the bears' last stand, right? They were really needing the market to start going down here. And then the opposite happened. We got a big bull bar closing near its low, near its high. And then even worse, follow through bar, another bull bar closing near its high, closing above this prior high here. So that's why I have this bar marked. The things, right? What's going for this is that the bears are trapped, and the bulls are starting to show strength. So, these are really the kinds of trades that I love, is when one side is trapped, then they have to rush out of the trade. And you can just tell, with these 6 bars here, and then a larger bar, and then a couple more bars, you can just tell the bears are, if you imagine yourself, you had shorted somewhere down here, and then you're seeing this, that'd just be terrible. You'd be rushing to get out of your trade. And as a trader, as a bull, we know that's happening, and so we want to be getting long. And I have just this bar marked. Really any of these 4 bars here are going to be okay. Right? Any of these 4 through here. What about buying above just that first bar there? That'd be okay. I mean, I prefer when I'm trying to scalp for 5 points, the risk would be 10 points there, put my stop below. So I would rather be buying above one of these and then put the stop below it, and then just basically go for 1-to-1 risk reward and just get a quick 5 points. But buying above that's okay too. You just have to understand that your risk is going to be larger. And I want to backpedal just a second. I'm going to talk about some of these bars because this is important too. And I could imagine some people would have gotten trapped somewhere in here. So I'm going to talk about this. First thing I see when looking at these bars here is this wedge. First push, pull back, second push, pull back, third push. Wedges are reversal patterns. So as this market's going up and we get a wedge, we would expect the market to reverse down. So what's the issue with selling below this first bear bar here? Well, there's a big tail and it's above the moving average, so I don't want to be selling below that. This bear bar is probably better to sell below. But remember, I'm keeping in mind how these bears here are trapped. And the bulls are really going to start to try to buy strongly in this area to keep the market from coming down. If they can keep it from coming down, then they can get a rally up like this. So I know the bulls are stepping in somewhere through here. So I'm not super eager to be selling below a bar with, somewhat of a tail on the bottom. So then, skip a couple bars ahead and look at this bar. Well, now we have a double top here. All right, we have this high, pullback, second high. So what about this? Now we have a double top after a wedge. Well, there's a tail on the bottom and we're closing above the moving average. So, both of those are reducing their probability. And I have a third thing that's reducing their probability. And I'm going to show you from a prior day. So let's look at it. What do we have right here from the day before? We have a wedge, right? First push, second push, third push. Then we have a double top. So we have a wedge, double top. Kind of a similar situation, right? We had a fairly strong sell-off and then deep pullback. And the bears are hoping to get lower, but they're unable to. And, like yesterday, I was thinking this was a reasonable short for a swing, right? Wedge, double top. And then that failed. So keeping that in mind today, strong bear bar, wedge, double top, keeping that in mind, then I was thinking, well, a lot of the times days will mirror the previous day. And then, so then I avoided shorting there. Not only just because the bar was bad, but also because the previous day, that same setup failed. So always be trying to look at patterns on your chart and look at previous days, the day before, a day earlier in the week or last week, and see if that pattern was setting up on a previous day and see what happened. And the reason that's important is because the people that are trading today and the computers and the strategies that are being used to trade today are usually the same that were trading yesterday and the same that were trading last week. So the way they're going to affect the market is going to be about the same. So when you end up with patterns, then the outcomes of those patterns are often about the same because it's the same computers, the same people trading them. The same institutions have not adjusted their algorithms yet to trade differently. They're trading the same. They haven't gone in and updated what strategies of the computer should be using. So you'll often see same patterns for a couple days or a couple weeks, and then the market will do something different. So always be looking back the last couple days, couple weeks, see if you can find a similar pattern and see what the outcome of that was. All right, so market's moving up. Then next trade is marked here. And notice the gap or gaps that we have. All right, I can draw, there's all kinds of different gaps I can draw in here. One is from the close here to the closes up here. All right, we can tell, so this is a big body gap. This body and the lowest close here, these bodies did not overlap, so there's a big body gap there. There's also all kinds of smaller gaps through here, like this high and this low. Those 2 points not overlap, and that gap stays open even over here. We see these tails making these attempts go lower, and they just can't. So with this strong enough move, 6 bars up, I mean, the first thing I would do is be looking for some sort of measured move up from that. We didn't get there today. I'm suspicious that we might try to get up there tomorrow. So I'll keep an eye on that. But I'm looking for this measured move up. So I'm staying bullish in my mind. I'm not trying to have a bearish bias. I'm not looking for shorts. I'm looking for longs. So I'm not really looking to get short through any of this. Then we do end up in this tight trading range, but I can tell, right, with these tails, these are attempts by the bears to move lower. And so looking at this range, it's all staying above the moving average. And then we get this bar, this big tail on the bottom. It's scooping below these prior lows through here. And what's the common thing that everyone says? They say, "Oh, I'll buy and I put my stop in. It goes right down to my stop, and then shoots up to where I originally intended it to go." So this is kind of the classic pattern that happens to people, especially beginners. They were buying through here, and then the market came down and got their stops, and then shot up. And then also how I look at this is that this is an attempt by the bears to go lower that failed. Okay, so that's why I like buying above this bull bar. We're looking for follow through from this previous strong leg up. So strong leg, pullback, couple legs of a pullback, bears fail to go lower, and then we want to be looking to get long. What about buying above this bar right here? Well, I would hesitate on buying above a bar like this. One, it doesn't have too much of a body, right? The bar is mostly tail and the body is smaller. It's also right in the middle of this tighter trading range here. We've had a lot of overlap right in this area. So I would hesitate on trying to buy here. Also, after these 5 bars down, 5 bear bars, 5 or 6 bear bars down here, I would be probably looking for more of a second leg down from this. So first leg, pull back, and then it seems to me that bulls buying above here probably would get stopped out below because the bears are looking for a second leg down from this move here. So with the overlap, with the bar being mostly tail, we're still, probably be expecting a second leg of some sort down from this. Then I would hesitate on buying there. Now, the follow through bar, if this bar, see how it's more of a body, and it's starting to close a bit higher up, then I would be interested in buying above that if the market went above it, but it didn't. Then we had this deep pullback here, stopped out a lot of the bulls, and then shot back up. So I think this is the best buy out of all this here. And that brings up a point that I want to make. Notice how I was not super excited to be buying above this bar. I would rather have waited for a second bar. Notice I was not excited to buy above this bar. I'd rather wait for the second bar and buy above that. And then here I have this bar marked. We have a first bull bar here. And then I have the buy marked above that second bar. And, I have these marked like this where we're avoiding that first bar and buying above the second, because once you get that follow through bar, that increases your probability. It helps avoid getting into trades like this where you buy and, it has some things going for it, but ultimately you just get stopped out just to go back in the direction. I think if you wait for a second bar when you're kind of, all these, you're still kind of playing the range a bit, like looking at this, you're buying, but if you buy above this, you're kind of buying near the highs and your stop is large. If you're buying anywhere in here, you're kind of still buying within the range. So then by waiting for that second bar, you're getting a bit more confirmation that the market is heading up and that it will be breaking out of that range that it's in. So I have this marked as a buy, 2 pullbacks, first and the second. On a lower time frame, it would also be a wedge. You can see these 3 tails on the bottom of the bars here. So market breaks above this high here. And instead of trying to buy above this first bar, which is kind of a weak looking doji, I'd rather wait and buy above a stronger looking bar, which is this one here. Notice we've also never made any closes below the moving average. We've been holding above the moving average the whole way up. So I like buying above that. there's some sort of wedge pattern here. First push, second push, and then, third push just kind of has two different pushes here at the end. So it's some form of wedge pattern. Bears try to get below the moving average and fail. They get this inside bar. Maybe some people would buy above that for a swing, and we can see that would have worked out fine. But what I'm trying to focus on here is look for more of the scalps, the quick scalps. And so instead of buying above that first bar, I'm going to look for another bull bar to buy above. I'm not going to buy above this because it's most of it's most of the range here and has this tail on top. And the next bar didn't go above it anyways. But buying above either of these bars, I think these are better buys here. So if you buy above this bar, for wedge bottom, you have a low here, then the second low, so you call this double bottom, where this is the first bottom, then this is the second, and then you get a bull bar following that. If you're buying above that, your risk is only going to be 1.5. So your risk is really small, but you pretty quickly can get out with 4 points up here. So that's why I was saying that's a good buy there. So that's our day. I thought it was a really good day. I thought it offered a lot of, just reasonable scalps. And it also kind of had some tricky traps in here, kind of like we were talking about here, or maybe one of these buys right in here, you would have been stopped out down here. And so I hope I kind of explained reasons why some of those buys might have not been the best to take and might be better to wait for a second bar or another failed breakout lower. You're never going to be perfect. You're always going to have some losers, but by studying your winners and your losers and taking the time to look at what works, kind of like, a basketball player, they don't just go out and play. They also go back to the film room and look at the film and see how they were moving. And for athletes or for anyone doing anything, one of the best ways to learn is to have themselves recorded or go back and look at what they were doing. And then that might have some shocking results when you just by being able to watch yourself, and you can see, it's very obvious what I was doing wrong there. So take the time to go back and review your trades and review the chart every day. And I guarantee if you review the chart and think about your trades, and then you will get better. But that's really critical, is to take the time to review the chart and to review your trades. All right, guys, that's all I have. We have 2 more days of the week, and I'll see you next time.